Welcome to the Real P&L Trading Show, where every week I share my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. I also share my safe wheel strategy for free here. You can ask me any questions you like about the safe wheel. I'll answer all those questions. In the comment sections, can you guys let me know that my tech is working okay? You can hear me, you can see me. Just shoot me a little message there. Look at Shovel. He's first for the first time. He is actually first. Okay. Be sure to post any questions that you have too. And because I get to the end of the broadcast, we're on a little bit of a delay, and sometimes I get questions that come in at the last second and I don't get to them. So be sure to ask me those questions earlier rather than later. All right. I'm going to go ahead and talk about the first thing, which is the Earnings Edge. This is my Earnings Edge account here on the screen. I traded NVIDIA last week on an earnings trade, and with NVIDIA, I made $1,390. So that was a good trade. You can see since I updated my Earnings Edge system 3.0, I have 22 wins, 2 losses, 1 break even, 88% win rate. My average win is 1,083, average loss 874. Okay, and if you want to look at the results for the Earnings Edge, I am not shy. I have 22 for 2022. I did 63%. The market was down around 20. 2023, I did 17%. Market was up around 24. Earnings Edge in the 2024, I was down 36%, and the market was up around 23. In 2025, let's see. Let me put in the right number here. This is the account. I have 26,727. 26,727. So let me put that in there. 26,727. So for 2025, it's up 341%. This is the new Earnings Edge 3.0. You can see that I started with $6,053. I've made $20,674 in net liquidation profits. I'm in all cash right now at the moment, and that is pure, 100% profit, no open positions, and that is what's going on with the Earnings Edge in 2025. You can see the total since I started up 434%, and the S&P is up 43.5%. So the S&P is up, how many years is this? 1, 2, 3, almost 4 years. So, or S&P is doing their average around 10% a year. Now, on the risk-adjusted basis, this is just estimates, not really too significant, but obviously the Earnings Edge is vastly outperforming the S&P. All right, let's talk about my PL5 Pro account. This is where I have a majority of my liquid net worth, and that would be in this particular account, the 27527 account, and 447,348. 447,348. Let me put that in there. 447,348. So up around $7,000 this week. And I started this PL5 Pro. This is actually the 2.0 system, or actually the 1.0 system, July 19, 2024, with 403,907. And towards the end of 2024, the last half, I did 15.9. The market was up 6.5, so I outperformed there. Then actually, I started this PL5 Pro, the 3.0 system, in June. So I have a newer, updated system in June. So I'm probably going to update this to bring this back to June of 2025 at some point, probably starting next year, because this system that I was trading here is not as advanced as the system I've been trading since June of 2025. But I'm going to keep this here until the end of the year. And I'm probably going to reset this to June of 2025 at some point. But we can see here that I'm down 21,000 this year. I'm down 4.5%. And the market, let me put in the market. What is SPY trading? 678.35. Put that in here. 8.35. Market's up 15.86% this year. So market's having a really good year. So you can see here, since I started this account, I'm about 10.76. Market's up 23.56. That's a big move, larger than normal for the market in the last year and a half-ish. But on a risk-adjusted basis, I'm up 21.5, market 23.5, so pretty even on a risk-adjusted basis. But I am curious to see what you guys is when I reset this to the 3.0, I'm basically gonna reset the account because I'm not trading it the way I used to. Wanna get your thoughts on that. I don't wanna be looking like I'm trying to hide anything or anything like that, so if you guys give me your thoughts on that, I'd be interested to know. I'm gonna reset this to July no, June 1st of 2025 at some point because that's the system that I'm currently trading. But I don't wanna hide anything, so I want you guys to kinda tell me what you think about that. Okay, and then when we talk about the PL5, let's talk about that. This account is a variant of the PL5 Pro, and it is tied to the S&P, so it will draw down with the S&P. So it's a little bit different than the PL5 Pro, and you can see how the results are so far. Let me bring over the account. I trade this one with, I started with $30,000. I traded in a smaller account, and I traded with Interactive Brokers because the commissions are too high to trade with just $30,000. Trading this system with Thinkorswim with /ES, for trading /ES has really high commissions when you trade it with Schwab or TOS, but in IB they're reasonable. If you're trading SPX, you can trade Thinkorswim, TOS, Schwab. Those are reasonable rates. Here is the results. I can't show the whole screen. 35,943 is how much is in the account. So up around 300 bucks from last week. 35,943. You can see the results. This one I started from July 16th, 2024. This started with $30,000. You can see it's 10.2% in 2024, where it was 3.94. So this is the last half of 2024 where you can see it outperformed. And then in 2025 so far, this system's up 8.7. The market's up 15.86. So if you take it from the beginning of July 16th, 2024, the PL5 Pro variant here, S&P variant, is up 19.8 and the market's 20.4. So pretty much mirroring it. And on a risk-adjusted basis, the drawdowns are pretty equal. So this thing's performing about the same as the S&P. I would expect it to outperform the S&P as we move further out in time, as time goes by. The more time that you put into this, the better chances, the odds are that it's going to outperform. All right, let's talk about the safe wheel. What's going on with that? How much money is in the safe wheel? That would be the first question. So the net liquidation is $6,046. 6,046. So down about 20 bucks from last week. And if we look at the safe wheel from 2022, it did 21.7. The market was down 20, so it outperformed there. In 2023, it underperformed at 5.39, where the market was up 24%. And then 2024, it had its worst year ever, where it was down 14%, and the market was up 23. So you can see there's no correlation to the market. And also with the safe wheel, so far this year, year to date, up 10.3%. Market's up 15.86, so underperforming a little there. But I get about half the drawdowns of the S&P. So on a risk-adjusted basis, starting from 2022, they're about even with the S&P on a risk-adjusted basis. But on a nominal basis, the performance is about half of the S&P since the beginning of 2022. Okay, so you see the results of the safe wheel. I've traded the safe wheel. Probably done 99% of my trades live. There's a couple trades that I don't do because I do those trades every Friday and I don't come in live, but they're only $5. I spend $5 every week. on a hedge. So you don't see that particular trade that I make, but everything else you've seen here live with this account. Currently trading Intel. Let's see what's going on here. I own 100 shares. Okay, so that tells me I'm going to be looking to try to write a covered call. But first thing I want to do is make sure that my hedges are in place. So if you're trading the wheel, what I've noticed is if you're trading the regular wheel, what you're doing is after a year or two of trading the wheel, you're basically filtering until you put losers in your portfolio. So you're just filtering. You might have a winner, a winner, a winner, a winner. Then you put a loser in there. Then you'll have a winner and a winner and a winner. Then you put a loser in there. And eventually you're going to come in to where you have all losers in your portfolio. That's what the wheel strategy is. You filter, filter, filter until you pick up losers and you're holding losers. That's how the wheel strategy works. And I think it takes people, a year, 2 years, maybe even up to 3 years to figure that out. So if you've been trading the wheel for any extended period of time, you've figured out, whoa, I'm just holding a bunch of losers here. So that's why I have the safe wheel. So you can hedge yourself and you're not going to be holding losers, and you can collect premium every single week with the safe wheel system. If you get stuck in the wheel with a bunch of losers, you're not going to be collecting any premium and you're just going to be stuck. So we have the safe wheel. So the first thing is I want to make sure my hedge, I have 3 questions around this hedge, this put hedge. Number 1, am I under 100 days? Because if I am, I would roll it out or exchange it, because I don't want to have too much depreciation. We're at 122 days. So next week I'm going to have to move this thing. So nothing to do there. Number 2 question is, do I own 200 shares of Intel? Because if I own 200 shares, I need to look at this hedge and see if it pays off. But I don't own 200 shares, so I'm not worried about using the hedge. Third question, this 33 put, it's got to be close enough to the money to protect me, and I want it to be within 70%. So I'm going to go ahead and run the calculation. So 33 divided by whatever it's trading, 38.94, 38.94, and it's 84%. So it's easily within 70%. So my hedge is effective or close enough to do its job. Okay, so my hedge is good. Then I have my $5 hedge that I buy every week. It's a long call. I bought the 55 call to protect this hedge. This call is only here to protect this hedge, because if Intel goes from $39 to $50, this hedge is going to become worthless and lose a bunch of money. So I want to have this long call here to protect it. So I spent 3 cents on this long call last week. It's worth 1 cent now. No big deal, but that is good to go. So now that my hedges are in good shape, I want to run the traditional wheel. I know I own 100 shares. What do I want to do? I want to write a covered call. I know what my basis is, $36. So I want to write a covered call at $36 or higher. Let's take a look at the chain. I want to do it with this particular system. The way I'm running it, I do it at the end of every week. So today being Monday, I want to look at the options that expire on Friday. Let's see if I can write a covered call, because I have parameters. I want to get at least 39 cents for it. So here are the calls. Here's my 4 days from now expiration, and I want to write a call out of the money. Well, not out of the money, but beyond $36, right? And I want to get at least 39 cents. So I can go all the way to here. The 41, I can get at least 39 cents. I could sell this call here, but I like to get to where I can sell the call and then go one closer, as long as I'm still out of the money, of course. So I'm going to go to the 40.50 and I'm going to sell this one. I'm going to do one because I have between $5,000 and $10,000. When I have between $5,000 and $10,000, I write one call, one contract, and I have 3 put hedges. And I have one long call, of course, a little $5 call. So I'm going to write this one. I'm going to collect, I don't know, we'll see, 50 cents, $50 or so. Mid price is 51. So I'm going to sell the 40.50 call. This is going to expire on Friday. If I get called away, okay, got filled there. If I get called away, that's okay because I bought my stock. If I get called away, that's okay because I bought my stock at $36. And if I get called away at $40, I'll make like 450 bucks here. So I'm totally fine getting called away. And I'm totally fine collecting 50 bucks this week. I'm always collecting ABC. Always be collecting premium with the wheel strategy. And you can do that with the safe wheel. You cannot do that with the traditional wheel. Okay, so there is the only trade that I'm going to make. So let me get into next. Questions and comments. All right. Shovel says he's first. Shovel says hit that like button. Yes, thanks for reminding me about that. If you like the fact that I show you my real net liquidation P&L every week, plus I also show you every month, I'll show you my equity curve so you can make sure that I'm not adding or secretly adding money to the account, right? You can see everything. I'm totally transparent, and I want you to see how I'm doing. Even if I'm not making money, you're going to see it. And so if you like that kind of content, and my goal is to get all the instructors out there that are claiming or pretending that they're making money, or if they are making money, to show this information, show the net liquidation on a consistent basis, and show the equity curve, and show whether you're adding or not adding or subtracting money out of the account. The more exposure this video gets, the more that gets out there. And so if you hit the like button, that's what helps get this video out for more people to see this level of transparency. And let's make this the standard on YouTube. Martin says, hey, Shovel. Tom says, good morning. Good morning. Less is more. Good to see Shovel again. Yeah, it's been a while. I think we talked about him last week. He wasn't even here. Kevin, good morning. Less is more says, wow, EE is off the charts. Absolutely. I have quadrupled my account. So I turned a $6,000 account into, what is it? 26,000? Yeah, turned 6,000 into 26,000. That's more than 4 times. Pretty good. This 3.0 earnings edge system working really well. Let's see. Some guy says your backtest showed the EE results were better if you held to Friday. Your NVIDIA position would have generated much better return if you held it a bit longer, albeit it fell before it went back up. For sure. So there's a couple ways to trade the earnings edge. You can take profits a little earlier, or you can hold. If I would have held, the NVIDIA position at some point was up $5,000, but you just don't know. And if I would have held according to the very strict guidelines and rules, which some people probably go by those rules, maybe some guy does that, I would have been a $5,000 win. So he asked, can you explain your rationale for taking profits? Yeah, I like to sometimes. So when you're in the earnings edge, the goal is for the stock to move, and then sometimes it'll move and then go back to center. So let's say I bought it. Let's say that when I got in, the stock was at $100. So if let's say it goes to 98, I'm doing pretty well, and then it goes back to 100. Now I'm not doing so well. Let's say it goes to 102. I'm doing okay, and then it goes back to 100. Now I'm not doing so well. So I want the stock to trend away from 100, either way, up or down. And a lot of times I'll catch it. Let's say it goes from 100 to 102 or 103. I'll go ahead and take profits, which could be around 20, 25% of what I margin used. I'll take those profits because now I'm kind of like, well, is it going to go to 104 and 105, or is it going to go back down to 100? I don't know. But if you hold until the end of the week, what's going to happen is you're probably going to have um, more. Your win rate's going to be lower, but your wins, the amount of money you make per win is going to be much higher. So I guess I'm more interested in having a higher win rate right now than I am having larger winners than losers. Um, I don't know which one would have been worked out better because I'd have to go back and back test what would have happened. But the back tests show turning $5,000 into over $28,000, but it takes 3 years. I've turned $6,000 into 20, whatever the number was, 26,000 or 27,000 in 10, 11 months. So far, taking profits a little earlier seems to be working better than the back test. Simon says, hi, Karl. You seem now to be taking profits earlier on the earnings edge with trading a bigger account. Would you not consider selling into profit targets at different percentage levels? NVIDIA is a classic example. Yes, I like that idea of, I'll take 5%, I'll take a third of my profits at 5 or 10%, then I'll take a third of my profits at 15%, then I'll take a third, the last third at 50%. I like that idea a lot. It's not a bad idea at all. It just needs to be back tested. Tom says there's no issue with resetting your base if the earlier record is noted accurately. Thank you, Tom. I appreciate that, and I agree with that, because the thing is, the trading, the 1.0 and the 2.0 to get me to June 1st of 2025, I'm not trading that way anymore. So it's accurate that that's where I got to, but it's not really accurate in terms of what would have happened if I was trading the way I'm trading today. So that's why I'm talking about the account kind of reset there. Martin says, hi, Karl. If you could show the calculations behind the risk-adjusted basis percentage. They're just ballpark. If I remember properly, on the risk-adjusted basis, if my largest drawdowns, for example, I would take my largest drawdowns. So let's just say the safe wheel. Let's say my largest drawdown for the safe wheel was 15%. And the largest drawdown for the S&P 500 was 30%. Well, that's where I get my number. Pretty much, my max drawdown was about half of what the max drawdown was for the S&P. So I know the S&P drew down in 2020 33, 34%. So I use that number. And then I have my safe wheel where it's drawdown around 15%-ish. So I go about halfway. It's not like a perfect exact thing, but I have just kind of a little bit of a ballpark on that. Same thing for the PL5 Pro. I kind of, that's kind of the way that I calculate that. John says, hi, Karl, why hedge with 3 puts when any given time you only have a max of 200 shares? Well, the reason is because when I purchase those 3 puts, I want to purchase them for less money. And so I purchase them out of the money. So if I ever get long 200 shares, I'm typically going to be at a higher price than my strike price of my 3 put hedges. So there's a gap between the strike and what I actually cost basis for those 200 shares. So I have to account for that gap. And so the owning 3 versus 2 is where I account for that gap. I hope that makes sense. And if not, I'll try to explain that better. All right, good questions here today. So again, I appreciate you guys' feedback on letting me know about the account reset situation. I'm definitely not going to hide, or, it's not like I'm going to take down the video of today or whatever, and it's not going to show what my history was. But I just don't think it's as accurate to show older systems performance when I'm trading a newer system. So that's kind of why. All right. Uh, I don't see any more questions or comments. I appreciate you guys. And in parting, if the P&L is not real, what else are they trying to conceal? I'll be back next week. We'll see you then.